Hello, folks. This is Raj Sastry from Raj Option Trading. Today, I want to talk about one of my favorite companies. It's in the technology space, in the IT space. They are, doing a lot of the big data analytics type work. The company is C3.ai. Symbol is AI, and these guys are really trying to provide enterprise artificial intelligence. And I think company has done a great job. It's got a legendary leader, Tom Siebel, at the helm. As many of you might be knowing, Tom Siebel started the company called Siebel long time ago, and he sold that to Oracle for $5.85 billion. So he's a seasoned CEO in the technology space. I think he's going to transform this company again. So with that, this is the image from C3.ai website, and they want to really do very well in this AI space. And their ambition is to solve the problems that have never been solved. So really, very lofty ambition they have. And according to the research from Grand View, the artificial intelligence market size is going to be expanding at the annual rate of 42.2% from 2020 to 2027. So this is a huge acceleration. I've watched many of these acceleration. This is the huge acceleration that I've seen so far, which is really incredible. That shows the power of big data and how big data can help the decision making, whether it's in biotechnology or energy or defense, any sector. This can really help. It's agnostic to the sector and really unlock the key decisions. With that, let's dive into C3 AI. From a industry recognition perspective, this company has got lot of recognition. They got recognition from multiple folks, as you can see here. Um, Omdia, Forbes, it's one of the disruptor 50 companies, best place to work. And you can see here they got multiple awards and recognitions. So with that, let's jump into the profile of this company. C3 AI, it's a leading enterprise AI software provider, and they provide comprehensive services to build enterprise scale AI applications more efficiently, cost effectively. And there are a lot of competitors. We'll go through that in a little more detail, but at the high level, I think these guys are doing great. And stock price is 68.90. It's really beaten down at this point, trying to make its way up as we speak. Market cap is $6.95 billion, and they've got legendary CEO Tom Siebel. 94% of the employees approve the CEO. That's a huge approval rating. We have 272 people who really voted for this 94% approval, which is great. From a stock chart perspective, as you can see here, stock chart is ugly. They started back in December last year, hardly 6 months into, not even 6 months, in the IPO life, and company has done very nicely out of the gate, and then dropped. There was IPO. There was a lockup expiration in January. That's why stock came down. I think there are more lockup expirations. That's why the big insiders, are selling. And also they had a little bit disappointment in the earnings back in March. That's why stock kind of tanked very nicely here. And now it's trying to make its way back up. That's why I think at this point it pays to be a contrarian and buy little bit and keep it for a long time. If it goes up, good. If it goes down, you can add a little bit to your position. So I like the risk reward ratio here. That's why I'm buying slowly, and adding to my position of this stock. And from a revenue perspective, it's a $172 million, trailing 12 months. Nice revenue growth, 19%, not huge, compared to other BI companies, but it's good. They got a lot of cash, $1.12 billion. They are not going to run out of cash. Very low debt, which is very good. And operating cash is still negative. They're not really making any earnings at this point. It's negative at this point. And about the legendary leader, Tom Siebel, he's the chairman and CEO, and he's also the founder. I love when there is a founder at the helm of the company. And he sold Siebel Systems to Oracle for $5.84 billion dollars back in January 2006. And he founded this company, after that. And he also serves as board of advisors for multiple colleges, which is good to see. And from a headline news perspective, I think they are going into multiple areas. They are also doing derivative tax processing. Um, they're getting into multiple areas. They're also into um, they're also forming some strategic partnership with IBM and a couple of other companies, even Microsoft Azure, and they're into energy sector with Baker Hughes, and they're doing multiple things at this point. But major headline, as you can see here, is this earnings. They did the earnings, they missed a little bit. I think they did also good guidance. That's the major earnings. Back on March 2nd, as you can see here, it plummeted. We'll go into a little more details on C3.ai and their earning itself and take a deep dive. So with that, let's jump into key competition. These early stage companies, we got to look at the competition and see how they're doing. That will give us a good idea who are the players in this space and how is the company that we are looking at right now, which is C3.ai, stacked against its competitors. So with that, as you can see here, market cap is around 7 billion, and we got a lot of other players here. And if you look at the performance itself, 3-month performance, it's a negative 53%. So out of all the peers or competitors, C3.ai has suffered the most in last 3 months. And if you look at gross margin, it's a respectable gross margin here, 75%. I think they're one of the top here. There are a couple others with higher margin, like Alterisk as an example. This is one of the good company. I invest them. These guys are also beaten down at this point. And there is a Datadog, which is also good. There is a Talent, which is 78%. So I think these guys are in the top area when it comes to gross margin. And then if you look at the valuation itself, price to sales ratio, these guys are not cheap yet. It's a 41 times sales, which is a little expensive. But if you compare it to Snowflake, these guys are really cheap. And if you compare with the Datadog, it's a little bit cheaper than Datadog. So with that, I think at this point we can start dipping our toes and buy some AI or C3.ai because things are really bad. Company has stock has depreciated so much and oversold so much. And if you look at the institutional ownership, I think these guys are a little bit lower at this point. Palantir is still lower, but I think there will be more and more folks backing this company, relatively new company at this point. And from a sales perspective, as you can see here, quarter over quarter sales, we just saw earlier 19% higher, but some of these competitors, I think, they're doing better. For example, these guys here, Elastic, MongoDB, these guys are doing a little bit better than, C3.ai, but C3.ai not bad, 19% revenue growth. So with that, this gives you an idea. I also buy companies like Palantir, which is also my favorite. I also buy Elastic, MongoDB, Datadog. These companies I watch very closely and buy whenever there's a dip. And Snowflake too, it's also a good company. Only thing is valuation is so high. You got to be careful. Buy only on the dips and not otherwise. So with that, let's jump into C3.ai and go into a little more details. From a fundamental perspective, when I buy a stock, I typically look at both fundamentals as well as technical. Fundamentals will tell me how is the growth for this company, what can I expect, and technicals will tell me what's the good entry point. So you need to know how is the company doing fundamentally. You also need to know when to buy the stock, when do you make the entry and buy the stock. That's basically technicals will tell me that. So with that, let's go into fundamentals here. From a market cap perspective, as of 12/31, it was a $13 billion company, and they have revenue was 49 million, and revenue surprise was 1.83 million, which is good. They got a good amount of cash, like we talked about earlier. Free cash flow is still negative, which is okay for these early stage companies. Nice gross margin. Operating margin is negative. Company is still not earning. That's why earnings per share is negative. And this is why stock tanked. There is a EPS surprise. They surprised negatively in the quarterly earnings on March 1st. That's why stock tanked. And price to sales ratio is a little pricey, like we talked about. And couple reasons why stock tanked. C3 has got small customer base as of now, and they have a lot of exposure to oil and gas industry. And this industry, last year was pressured so much with this economy being closed. I think it will recover as we go forward. And companies mitigating this risk by adding more customers in the other areas, like defense contractors as an example, and a couple other segments. And company also posted a net loss of 23 cents, which is worse than 90 cents. So that's why analysts did not like it. They pushed the stock down. And from a financial outlook perspective, these guys are guiding a little bit better. So they're guiding, for the fourth quarter, 50 million to 51 million, which is a little bit better than what they did last time, which is 49 million. So there is a positive outlook for the fourth quarter, which is good. And also for the full year, they're guiding 180 million. So which is a little bit better than what analysts were thinking. So guidance perspective, it's a little bit better, but what they've accomplished in the last quarter, which was a little bit negative. And as you can see here, just after the earnings on March 1st, which comes into this year, a week of the February 29th, they disappointed a little bit. Stock tanked 15%, and following weeks it tanked even further. So really steep decline after the earnings. Even before the earnings, as you can see here, they were kind of tanking even before the earnings. So that's why there is a huge stock drop between 14th February all the way to 21st of week of 21st of February. Only I think it was last week they started improving, or this week, and it was up 6.49%, which is which tells me it's kind of showing some signs at this point. Most of this heavy selling is kind of overdone at this point, and there is a you know there is a improvement, because the stock bottomed. So with that, let's go into a little more detail and go into earnings highlight. From your earnings highlight, the earning itself, the total revenue is 49.1 million. It's up 19%, which is good. And they also did very good on gross margin, increase of 22% year over year. And they're also, like we talked about earlier, in addition to this, this whole oil services market, they're also into aerospace, which is good. They're kind of, going into other areas, into utilities. So that's why I think there is a good expansion when it comes to multiple areas, and expanding from a small customer footprint into larger footprint. um, that's what they're talking about here also, expanded market partner ecosystem. And they're also having some new product line. They're partnering with Microsoft, Adobe, and announcing the C3.ai CRM. As you know, Tom Siebel knows CRM very well because he was founder of Siebel Analytics back in good old 2006 type days. So he knows this space nicely. So I think he can do a very good entry into AI, CRM, artificial intelligence, customer relationship management. And they're also expanding their investments and penetrating the market. and they're adding more top talent to their leadership team, and also board of directors. Overall, I feel there's a positive momentum. Even though stock is down in the ditch right now, it's really showing some signs of improvement. So with that, let's go into performance at this point. From a performance perspective, last year they just went IPO back in December. They did 16% for the whole, like it was hardly a month, I guess, 16%. And 2021 so far, they're down 50%. So it's a huge drop. So that's one of the reason I feel, company is solid. They got a nice leader in Tom Siebel, and they're doing the right thing. They're expanding into other areas, partnering with IBM and Microsoft, Adobe. I think they can do well. And now let's look into weekly performance. From a weekly performance, as you can see here, January was down. February, this is monthly, sorry, monthly performance. January was down. February is down. January is hardly 0.61% up. February and March, these two brutal months. March is the earnings month, so that's why they're down so much. April, now they're showing some sign of improvement. If you look at weekly performance here, similar trend here. February 14th all the way to March 21, big, huge drop. Now there is some sign of recovery. And if you look at daily performance, this will give us a little better picture here. They are kind of stalling and selling off, heading into earnings. As you can see here, and even after the earnings, it's been selling off. Now they're showing some signs. Last 3 days, they showed some signs of improvement, which is kind of telling me there is some ambition or hope that the stock is turning a corner at this point. So with that, let's look at technicals here. From a technical perspective, so this is a 6-month, 1-day chart of C3.ai as of April 2nd. And stock, as you can see here, made almost a double top and kind of fall off the cliff. And now it's trying to make its way above. I think this is a 10-day moving average. So it's trying to make its way up. I think as it goes up, then it will take on the 20-day moving average and maybe the 50-day moving average. Then I think we'll be in a good shape. At least now I see the trajectory or a curve is kind of trending up a little bit, which is a good story. And from a RSI perspective, relative strength index, it's kind of flattening out, or if you really squint, you can see it's trying to edge up, which is good. Right now at a 42, RSI, relative strength index, I think it's a very good level to buy some. And as RSI moves up, stock will also move up. Implied wall has crushed. After the earnings, typically implied volatility gets crushed, which is very typical. At this point, I feel even if you want to buy a call option, because volatility is so low, you can even buy a long-term call option, maybe say 120-day out type call option. And from a DMI perspective, this is very typical. When the stock drops so steep, in the DMI chart, the red line indicating the bearishness, that kind of goes up, and the blue line indicating the bullishness, it kind of tanks. So now at least what you see here is the red line is showing some signs of coming down, and the blue line is showing some sign of going up. So this will improve in the coming days if the stock does well. The red line will go up, and the red line will come down, blue line will go up. So that's a good indication. And from a volume average, as you can see here, if you look at this blue line here, it's trying to, it kind of bottomed out. It's trying to make its way up. We got some 3 solid bars here, green bars. That tells me at this point it's bottomed out and it's trying to make its way up. And if you look at a check-in money flow, the smart money is trying to get into the stock at this point. That's why you see uptick here in the check-in money flow. So this is where the big folks, they are trying to buy the stock into this weakness, so that way they can reap the benefit. Now let's look up a little more closely. For that, we'll look at a 10-day, 30-minute chart of AI or C3.ai. Clearly in the 10-day, 30-minute chart, you can see right from here, stock has started making its way up, so which is a good sign. So all the days where it fell off the cliff, that's kind of behind it right now. It's kind of trying to make its way up in last couple days here, which is good. If you look at this chart, I think now stock is already above uh, 10 50 period moving average, 20 period moving average, and also the 10 period moving average, which tells me it's kind of making its showing the bullishness in the shorter term chart. Now let's even take a look at a shorter term chart. This is the 10-day, 30-minute. Let's look at a 5-day, 5-minute chart. In this 5-day, 5-minute chart, clearly stock is showing a positive sign. It's going up. I think the shorter term, the 10 period moving average is above the 20 period moving average and 50 period moving average, which is a good sign. So it's showing the bullishness. And in the shorter period, the DMI chart, the blue line is above red line, and the ADX, which is a momentum indicator, it's also making its way up. So anytime the blue line is above red line, that shows the bullishness. Right? And when that happens, when the blue line is above red line, if the ADX line, which is a solid white line, if it makes its way up, that means there is a momentum on the positive side for this stock. That's why I like the shorter term chart and the way it's trying to trend up at this point. Volume average perspective on the balance volume, I see at least there's some good momentum and people are buying the stock. It's a little bit flat at this point, as you can see here. And check-in money flow is telling me the shorter term, sorry, the smart money is buying into the stock. They are really buying the stock. That's why it's kind of trending up right now, which is a good thing. So clearly, from a technical perspective, the chart is telling me, hey, you know what, this is a good time to buy some. A stock is showing some bullishness. It's bottoming out. Now let's look at the options market. Let's see what options are telling us. So this is a thinkorswim option chain. I'm looking at 16th July 21, 105 days out. And if you look at 130 strike price, stock currently is at 68. 130 is almost like double the current price, and there is a lot of call option. There is 1,431 open interest for this strike price. That tells me people are bullish. They're buying call options out of the money. The strike price right now, current price is $68, which is somewhere here. So a lot of people are buying, call options, out of the money, like 70, 75, as you can see here. Lot of out of the money call options here. And if you look at the put side of the house, 130, there is also huge amount of put option, not as big as call option open interest, but there is there are people who may be already having some position, or even some speculators hoping it might drop. They have some position open at 1298 quantity for 130 strike price. And there are some openings here also, as you can see here, or in the money in call side, there is some open interest here too. So that tells me, by cursory look here, you can see call option quantity is more than put option quantity. That's why it's a bullish sign. People are really hoping Tom Siebel will turn this company around pretty quickly within 105 days in this example. So now let's look into option statistics. So this is again, as of April 2nd. What this tells is really there is a total call volume 12,717 and total put volume it's 2,746. So that makes put call ratio as 0.26, which tells me there is a lot of bullishness. Lot more people are buying call options than put options. The moment this happens, the moment you buy more and more call option, the market makers, they have to buy stock just to cover their risk. So that's why stock will typically go up when there is a more call volume. Now let's go into this is a chart from Thinkorswim again, and this is we call it Trade the Market TTM Squeeze by John Carter. This is really 1 year, 1 day chart. So this tells me, as you'll see through this, I think we got a Bollinger Band here, and there is, and we have, you know, the stock itself, as you can see here, trying to make a move up, as you can see. So I feel like, and also if you look at the squeeze itself, TTM squeeze, it did really badly. That's why you can see a red line becoming bigger and bigger and bigger. Anytime there is a red line which is below the zero line and its bar is becoming longer and longer, that tells, hey, what, there is a bearishness in the stock. But as you see the yellow line here and becoming shorter and shorter, that tells, what, now stock is turning a corner, and soon as it reaches the, as bar gets shorter, you might, start seeing a red dot, meaning, it's really, there is a squeeze forming. So that's why, as this bar gets shorter, it shows a positive bias. At this point, we are being a contrarian, and even though this bar did not go up here on top of this, we are buying it a little bit early, hoping this histogram will go on the positive side pretty soon. And if you look at a little bit, this is called A wave, this longer term wave. In the A wave, same story here. Histogram is trying to go above. It's already above here, as you can see here. The yellow bar is above. So shorter term histogram is telling me it's on the positive side because the bar is above zero. And if you look at A wave, which is a longer term histogram here, A wave, it was, the way to read this A wave is light blue line here, light blue bar above zero line, that shows strength. The dark blue bar above here, this shows little bit weakness, but because it's above zero, we don't need to worry. And as you go here, the dark blue goes down here below zero line. That shows the weakness. And now it's gaining some strength from dark blue. It's turning to light blue. That shows there is some strength coming up. So slowly this histogram, this light blue bar will become shorter as the stock strengthens, and it will go on the positive side. The histogram will go above zero, which will indicate now we are ready to march forward with the bullishness. DMI, same story here. I can see if I squint, the blue line here is trying to trend up here. Red line is trying to trend down, which will, this line will form as you go forward. I can see this going up and red line coming down. So which at that point will become bullish. But now we are being contrarian and buying it a little bit early before all the signs and the confirmations are in place. So now we looked at fundamentals, we looked at technicals. So now let's look at insider trading. So if you look at insider trading, one of the reasons stock fell was, as you can see, a lot of insider trading happening here because of the lockup expiration on the stock. You can see here $45 million sale at $76 back in 22nd of March. And CEO Tom Siebel, he has also sold, like around $50,000, $50 million stock. And TPG owners, same story. I think these are probably one of the 10% owners. They also sold significant stock. So all this stock selling will dilute number of stocks available and puts a pressure on the stock price. That's the reason for the stock to be down, in addition to the bad earnings. So I think this is a temporary phenomenon as these insiders sell some of these after the expiration, and the company is making new strides with new partnerships, getting into new areas. I think it will kind of work its way up. Now let's look at what should we do now. So we saw fundamentals, we saw technicals, we saw earnings. So I feel like because the quiet period is expired long ago back in January 10 and 29th, and a lot of lockup expirations happened, insiders have sold the stock like we have seen, and that's putting some negative pressure on the stock price itself, and now it's trying to show some strength. Companies really making a lot of effort to diversify from oil and gas into other areas like defense, like we saw earlier, and they're partnering with Microsoft, Adobe, and they're making this C3 artificial intelligence CRM platform or customer relationship management platform. So I think as they do these new partnerships, new product offerings, I think stock will take care of itself. So at this point, I feel the stock is oversold. Market really punished this stock so much, and at this point, it's a good time to start a position slowly but surely, and wait patiently and make some profit. With that, thank you very much. Happy investing.